Hey everyone, welcome back to another exclusive podcast from IronFX, where we're dedicated to bringing you the absolute best education to help you take your trading to the next level. My name is Desmond, and in today's podcast, we're unraveling the world of futures trading, what it is, how it differs from other financial instruments, and what you need to know before jumping in. So, let's dive in. The basic premise of futures trading. So, what exactly are futures? At its core, futures trading involves buying and selling contracts that obligate you to buy or sell an asset at a predetermined price on a specific future date. These contracts are standardized and traded on futures exchanges, allowing traders to speculate on the future price of commodities, currencies, interest rates, and other financial instruments. Futures contracts are used for both hedging and speculation. For hedgers, like farmers or manufacturers, futures provide a way to lock in prices and manage risk. For speculators, futures offer a chance to profit from price movements in the market. How futures differ from other financial instruments. Futures differ from other financial instruments like stocks and options in several ways. First, leverage is a significant factor. With futures, you only need to put down a fraction of the contract's total value, known as the margin. Right? This leverage can magnify both gains and losses, making futures trading inherently riskier. Second, futures contracts are standardized and traded on exchanges, whereas stocks represent ownership in a company, and options give you the right but not the obligation to buy or sell an asset at a specific price. Advantages and disadvantages of trading futures. Now, let's talk about the pros and cons of trading futures. Advantages: leverage. As mentioned, futures trading allows you to control a large position with a relatively small amount of capital. Liquidity. Futures markets are highly liquid, meaning you can enter and exit positions easily. Diverse opportunities. You can trade a wide range of assets, from commodities like oil and gold to financial instruments like interest rates and stock indices. Disadvantages. Risk of large losses. The same leverage that can amplify gains can also magnify losses, sometimes resulting in more than your initial investment. Complexity. Futures trading can be more complex than trading stocks or options, requiring a solid understanding of market mechanics and strategies. Margin calls, right? If the market moves against your position, you might face margin calls requiring additional funds to maintain your position. Popular futures products. So, which futures products are the most popular? Commodity futures. These include contracts for commodities like crude oil, gold, and wheat. These are often used by businesses to hedge against price changes in raw materials. Financial futures. This category includes contracts on stock indices, interest rates, and currencies. For example, S&P 500 futures or Eurodollar futures are commonly traded. Agricultural futures, right? These involve crops and livestock, such as corn, soybeans, and live cattle. That's a wrap on our deep dive into futures trading. We've covered the basics, how it differs from other instruments, right? The pros and cons, right? And some popular futures products. I hope this gives you a clearer picture of what futures trading is all about. Thanks for tuning in. And in the meantime, do remember to subscribe to our podcast here at IronFX, where we're dedicated to bringing you the very best education to take your trading to the next level. Until then, stay informed and stay tuned.